Crude oil settling up slightly on Friday at around $50.70 a barrel. But oil has lost about 6% of its value overall in the first quarter of 2017. And that is after the free fall from the highs of 2014. Oil then at around $100 to $120 a barrel. Traders are nervous. They're concerned about the sustainability of the OPEC-led production cut agreement and also the potential for more U.S. production. Well, here with us now is Carl Larry. He's the principal consultant of Oil Outlooks and Opinions. Carl, good to have you with us.
Thank you for having me. Very good.
So, Carl, oil prices are gaining some momentum on Friday. There's a growing sense that OPEC and non-cartel nations like Russia are going to extend production cuts for about 6 months. What is a signal? How rare is it that we have the cartel functioning and taking cohesive and collaborative action and with non-members?
You know, I think they learned a lesson from what happened back in 2015, 2014, the end of that year, and it's a hard lesson learned. So, you know, I think that they're sticking to quotas here, sticking to production, knowing that at these levels it's very fragile. They don't want to shake the markets too much to drop them any lower than they are, but they do want to be constructive and build them slowly and keep those prices moving higher.
Now, Carl, when oil was tanking in 2014, 2015, and Saudi Arabia was adamant about not moving towards reducing production, the theory out there was that Saudi Arabia was trying to drive out the smaller U.S. oil producers, the wildcatters, the frackers out of the market, with prices being too low for them to stay in business while Saudi Arabia could weather that better. Now, that strategy didn't seem to work, did it?
No, no, it didn't. And, a lot of U.S. producers kind of cut back different ways. Technology played a very big part these past few years on keeping the oil price where it's at and production stable. But I do think that Saudi Arabia was also trying to kind of maintain their ground within OPEC. There was a lot of overproducers in OPEC that were selling to countries like China and other countries in the Asian area, and they wanted to make sure that they didn't overstep their bounds. So now with some cohesion here, I think that Saudi Arabia feels comfortable they can keep everything in check.
And Carl, we've got some major changes on the oil front with the Trump administration. What can we expect given his outlook on energy?
Well, I think that, there's a lot of questions that remain here. One of the biggest ones, I think one of the biggest hurdles is going to be about this import tax, a border adjustment tax is what we're calling it here. And if there's any taxes on imports versus taxes on exports, it could play a very big role in the price of oil. If we're looking at any kind of increased tariffs or taxes on imported oil, especially from OPEC, that could make a very big change in the way that we see oil prices going forward. And especially with oil exports now coming out of the U.S. for crude and refined products reaching new highs, that could affect the way the market moves here too. So a very, very tricky situation going forward right now.
Carl, China's saying that it's targeting growth of 6.5% in 2017. That's down slightly from last year's actual rate of 6.7. It's a 25-year low for the second largest economy in the world. What impact is that going to have on oil demand and global growth?
It'll have some very important impact on the way growth goes, on the way the prices can move higher. But this, again, is where OPEC knows, and they've learned their lesson from past years, is that they have to keep everything in check here. They have to keep these production quotas where they're at, because with China just slipping even slightly, that's going to make a difference in these prices and where they can go. So can prices go higher here as the economy in the U.S. picks up, or maybe other parts of Asia? Yes. But can they go back to $100? Most likely not. So I think OPEC's going to try and play it very close to the vest here going forward.
So what is your forecast for oil for the next 6 months?
Next 6 months, I think we get above $60. I think $63, $65 is very reasonable. We are seeing some very high demand for crude oil here in the U.S., and that may trickle over into other countries where we see crude oil demand start to pick up there too. Remember, OPEC is pumping at very high levels, even with the production quotas cut back, well over 30 million barrels a day. And, record levels are at 33. So there's not a lot of spare capacity out there if economies start to grow.
Carl Larry, thank you so much for joining us live from Houston.